It's Monday. You guys know what that means. We are diving in to This Week in Freight, powered by my friends over at DAT. We're going to do a lane analysis for you guys. And again, if you want your lanes featured on this show, just email them to podcast@thefreightcoach.com. My team sends me that. Again, I just need shipping city, delivery city, trailer type. And then we're going to break this down because most importantly, you guys, fluctuations happen, things happen. I'm here to teach you how I personally assess lanes and go out there and actually move freight because, you know, your boy actually moves freight. So today's lane that we're going to break down is Tampa, Florida, going up to Louisville, Kentucky. And I pulled this one in particular because when Dean Croak was on the show last Friday, we were talking about flour loads, early produce season that's going on in Florida. And we specifically broke down Miami to Charlotte. And I brought this one up because this is in the van side of things. And we were talking about how there's some bleed over and what that does during produce season and the spikes that come along with this. So as you guys can see on this year-long chart here, it performs the exact same way that Miami did for reefer freight. Okay, so what does that mean? Anytime there is a seasonal push for refrigerated freight, it affects the dry van lanes that are going out there as well. You're going to see a natural rate increase. So right now, it's kind of performing. It's about $100 higher than what it was at this time last year. And as you guys saw out there, Florida is hammering ELP and non-domiciled CDLs at a higher level than most states are. So that is naturally causing the rates to start to increase out there. And you can see this trend line, all right? So just like last year during this time, I would fully expect it to follow that exact same trend line throughout this year. So if you're going out there and you are trying to assess how do I get long-term pricing with our customers? Because I think a lot of people are too much truck in hand and not thinking about the long-term relationship. I have some of my shippers that I work with, there's minimal that I'm out there with like contracted RFP pricing. A lot of them are truck in hand style quotes that come across, but I deliver them the exact same price throughout the year because from my seat, somebody who, you know, actually moves freight, lanes don't jump as much as people want to think that consistently. All right. I'm not saying lanes don't increase in pricing, but like if you're going to get long-term customers, you got to weather some of these storms, especially around peak time and everything else, because we want to bring stability to our customers. It's out there. It's achievable. If it wasn't, I wouldn't be sitting up here because this is literally how I've built my entire book of business around this, you guys. You don't need RFP customers to get air quote contract style pricing because the majority of the freight markets that are out there, you guys, perform the same year in and year out. I'm not here to sell you fear. I'm here to sell you stability and how you can go out there and actually win long-term freight. And this lane is going to perform this way. It pretty much has every single year that I've ever moved freight. You guys, outbound Florida does the exact same thing every year, minus a couple of peak years that happened here recently. So again, you got to look at this, you guys, and you got to bring this consistency out to your customers, all right? Because if you're not, I guarantee you guys, somebody is, all right? So this lane, Tampa, Florida, Louisville, this is about as stable of a lane as you're going to find, and it's going to perform probably the exact same this year as we're going into the market. But as always, you guys, if you guys want your lane featured on this show, I will break it down. I just need you to email it over to my team, podcast@thefreightcoach.com.